Assalamualaikum, my name is Aida Izzati Binti Armizan from Group 2. For the group project number 2, which is the financial statement analysis, we choose Aeon Company Malaysia Berhad and Parkson Holding Berhad, which both of them is in the sector of consumer products and services. Aeon Company Malaysia Berhad is part of the Aeon group of companies in Malaysia, which is 51.7% owned by an integrated holding company based in Japan, which employ approximately 57,000 Aeon people and operates in 14 countries worldwide. Aeon was incorporated in Malaysia on 15 September 1984 in response to the Malaysian government's invitation to help modernize the country's retail industry. Aeon manages and operates a retail chain of departmental stores, supermarket and pharmacies with an extensive range of products such as daily essentials, household items, apparel, pharmaceuticals, third-party shops, and other merchandise. Their mission and vision is to benefit their customer, and their operations are thus customer-focused to the highest degree. For Parkson Holding Berhad, it was established in 1987. Parkson Retail Asia Limited is a leading and award-winning Asian department store operator listed on the main board of the Singapore Exchange Securities Trading Limited on the 3rd November 2011. Parkson's department store count currently extends across cities in Malaysia and Vietnam. Parkson Holding Berhad offers its consumer a wide range of merchandise from fashion apparel to household goods. It also ventured into the lifestyle retail concept business, where its department store operations are complemented with elements of entertainment and food and beverages. It also introduced private label brands as well as agency apparel lines of numerous international brands. Its mission is to inspire the people and to delight their customers. And their vision is to be Asia's leading department store group.
Assalamualaikum warahmatullahi wabarakatuh. My name is Najihah binti Azri and I am from Group CS2495A. I will explain about financial ratios, which are a type of measurement that can be used to look at how a business works and how well it is doing financially right now. Financial ratios look at the relationship between individual values and relate them to how the company has performed in the past and might be performed in the future. It is also a great way to figure out how profitable a business should be and how well does business in general. So, there are 4 types of financial ratios which are going to be explained later. First, liquidity ratio. Second, profitability ratio. Third, leverage ratio. And lastly, efficiency ratio. I am going to elaborate about the liquidity ratio. Liquidity ratio shows a firm's ability to meet its short-term financial obligations, whether the company has the resources to pay its creditors when payments are due. Liquidity ratio is divided into 2 ratios, which are current ratio and quick or acid test ratio. So, for the current ratio, the formula is current assets divided by current liabilities. As we can see, for Parkson Holdings Berhad, for every RM1 of current liability, the company has 0.88 ringgit Malaysia of current assets to repay the current liability. While for Aeon Co Berhad, for every 1 ringgit Malaysia of current liability, the company has 0.5 ringgit Malaysia of current assets to repay the current liability. Parkson Holdings Berhad has a stronger current ratio, indicating that it can be better fulfill its obligations because its current assets outnumber its current liabilities. Aside from that, we observe that Aeon Co Berhad has a poor liquidity ratio, implying that the company will be unable to make all of its short-term obligations this year. So, Parkson Holdings Berhad has a higher current ratio than Aeon Co Berhad. Next, the formula for quick ratio is current assets minus inventory minus prepayment divided by current liability. As we can see, both companies do not have prepayment. So, for Parkson Holdings Berhad, for every 1 ringgit of current liability, the company has 0.57 ringgit of its liquid assets to repay the current liability. While for Aeon Berhad, for every 1 ringgit of current liability, the company has 0.18 ringgit of its liquid asset to repay the current liability. Parkson Holding Berhad has a quick ratio 0.57 times that of Aeon Berhad. Parkson Holding Berhad has 0.57 ringgit liquid assets to cover its current debt. A high asset test ratio, on the other hand, could indicate that the balance sheet remains idle stock or cash.
My name is Nurin Binti Rosli. I'm from CS2495A. So I'm going to explain the comparison of profitability ratios between Parkson Holdings Berhad and Aeon Malaysian Berhad. So there are 4 elements in profitability ratios. So first one, we are going to find gross profit margin ratio by using this formula: gross profit divided by net sales times 100. So in profitability ratio, we are going to define it in percentage. So as you can see, for Parkson Holdings Berhad, we get 56.4%, higher than Aeon, which is 41.9%. So we can conclude that for every 1 ringgit Malaysia of sales for Parkson, they are able to generate 56 cents gross profit, while Aeon generate 42 cents for gross profit. So this shows that Parkson Holdings Berhad is a more profitable and efficient company than Aeon Malaysian Berhad. Okay, next we are going to compare these two companies with net profit margin ratio. This method is using net profit divided by net sales times 100. So as you can see, Parkson Holdings Berhad gets a negative value of net profit margin, which is negative 8.03%, while Aeon Malaysian Berhad get 2.59% for net profit margin. That means Parkson Holdings Berhad has a net loss margin where the company will lose 8.03% of the amount of sales. However, Aeon Malaysian Berhad has a greater value of net profit. Instead of losing money from the sales, Aeon Malaysian Berhad managed to earn 2.59% net profit from the amount of sales. This shows that even though the gross profit margin of Parkson Holdings Berhad is greater than Aeon Malaysian Berhad, Parkson Holdings Berhad also suffered loss. Can you imagine, in Parkson Holdings Berhad, for every 1 ringgit Malaysia of sales, the company is able to gain loss 8 cents, while Aeon Malaysian Berhad generate profit 3 cents for every 1 ringgit Malaysia of sales. After that, we are going to find return on capital employed margin, which we use EBIT, earning before interest and tax, divided by capital employed times 100. So as you can see, Parkson Holdings Berhad get 2.13% of return on capital employed, while Aeon Malaysian Berhad get 6.2%. So you can imagine that for every 1 ringgit of the capital invest in Parkson Holdings Berhad, the company is able to generate 2 cents of profit. While in Aeon Malaysian Berhad, for every 1 ringgit Malaysia that we invest, the company be able to generate 6 cents of operating profit. So you can see that Aeon Malaysian Berhad generate profit more than Parkson Holdings Berhad based on the amount of the money that they invest. Okay, so last but not least, we have return on assets. We are going to use net profit over total asset times 100. So, return on asset for Parkson Holdings Berhad, we get negative 2.37%. And Aeon Combination Berhad, we get 1.96%. Based on the calculation, we can see that Parkson Holdings Berhad have lost 2.37% from the asset utilized, while Aeon Combination Berhad earned 1.96% profit from the utilization of the assets. So this calculation proves that Aeon Combination Berhad wisely used their asset to produce more profit to sustain. So from these four elements of profitability ratios, we can see that Aeon Combination Berhad have the higher margin ratio for three elements, while Parkson Holdings Berhad only have higher ratio in gross profit margin ratio. So we can conclude that Aeon Combination Berhad gain more profit than Parkson Holdings Berhad.
Hi, my name is Adriana and I'll be explaining for efficiency ratios. So first, inventory turnover. We know that the formula is cost of goods sold divided by average inventory. For Parkson, I got 3.74 times for inventory turnover, and for Aeon, I got 3.02 times. For Parkson, within an accounting period, Parkson Holding Berhad has replaced its average inventory 3.74 times, while Aeon has replaced its average inventory 3.02 times. Based on the table, Parkson Holding Berhad has a higher ratio in inventory turnover, which is 3.74 times, while Aeon has 3.02 times. It shows that Parkson is selling and replacing its inventory more frequently. This suggests that Parkson may be managing inventory more efficiently, responding to market demand and converting inventory into sales at a faster rate. Okay, so on the next slide, it's for average collection period. For the formula, average collection period is average account receivable divided by credit sales and times 365, which is for Parkson, I got 69 days, and for Aeon, I got 10 days. For Parkson, the company is able to collect its debt within 69 days of the accounting period, while Aeon, the company is able to collect its debt within 10 days of the accounting period. So based on the table, Aeon has a longer average collection period of 10 days compared to Parkson Holding Berhad, which is 69 days. A shorter average collection period for Aeon indicates a more efficient receivables management process, potentially leading to better cash flow and working capital management. Hence, for Parkson, it may need a longer time to collect its receivables, which could impact cash flow and liquidity. Okay, so for the last efficient ratios, which is total asset turnover, we know that the formula is net sales divided by total assets. And for Parkson, I got the total asset turnover is 1.15, and for Aeon, I got 0.75. So Parkson, for every 1 ringgit of average total assets, Parkson Holding Berhad can generate 1 ringgit 50 cent net sales, and for Aeon, for every 1 ringgit of average total assets, Aeon can generate 75 cent net sales. So based on the table, Parkson Holding Berhad has a higher total asset turnover ratio, which is 1 ringgit 50 cent compared to Aeon, which is only 75 cent. Parkson is generating more revenue relative to its total assets compared to Aeon. A higher total asset turnover suggests that a better efficiency in utilizing assets to generate sales. Moreover, Parkson is more effective in turning its asset into revenue, which could indicate stronger operational efficiency or better sales strategies.
Assalamualaikum and hi everyone, my name is Qistina Arlya and I'm going to present the leverage ratio part, which I will be starting off with the debt ratio and I will make the comparison between Binti. So from here, the conclusion is that both of the debts are considered quite high and both of the company are in critical position. Next, for the debt to equity ratio part, the formula is the total liabilities Berhad has acquired lesser debt than Parkson Holdings Berhad. So for the last part of the leverage ratio, which is the time interest earned, the formula 2.81 times, which is better than Parkson Holdings Berhad.
Based on the calculation that have been made, Aeon Company Berhad is better than Parkson Holding Berhad, even though the gross profit ratio for Parkson Holding Berhad is higher than Aeon. Aeon has a higher net profit ratio compared to Parkson, which means that Aeon gained profit from sale while Parkson suffered loss. Aeon has a shorter average collection period, which indicates a more efficient receivable management process. Aeon also has less debt than Parkson. By using this information, it will help the investor and supplier to choose the company that they want to invest in and supply to the company or not. As a conclusion, we as a potential investor and supplier will choose Aeon Company Berhad instead of Parkson's Holding Berhad.